What's going on, guys? Welcome back to another video. Today I want to do an overall analysis on the S&P 500 futures. Now, before we get this video started, I want to make it very clear that I am neither a bull or a bear in the current market environment. There is simply not enough time and not enough money to lose to come into a single day with a bias on the market. You guys have seen the market be pretty jumpy. You've seen that a bias simply does not work. So I want you to approach this video as a trader. I want you to watch the video focusing on technical levels, willing to look both ways. And that is why in today's video, I want to point out some key technical levels that the market has been pushing up into over the last few weeks. As you guys know, we've had a pretty strong rally over the last few weeks, but we are approaching a very, very important level on the S&P 500 futures, a potential inflection point that you have to be paying attention to if you are trading on an individual basis. It's been a few weeks since I made an overall technical analysis update video, so I figured right now would be a great time as we're approaching this level. So let's go ahead and jump into it. All right, guys, so here we are on the S&P 500 futures, and this is the weekly chart. And when I say weekly chart, that means that every candle you see on your screen, that is an entire week of price action. And if you look at your screen, you can see that we are approaching a very important level. This 4170 to 4200 level on the S&P 500 futures. On the weekly chart, it is apparent, which means it is very important knowing that this is where the market has rejected over an entire week span. We can see the importance of this level. If we go back to around the May 2021, this is back 2 years ago, we can see that after breaking and holding above this 4170 to 4200 level, we had that nice upside push. Now, when the market pulled back in the beginning of 2022, we had that push right back down into the 4170, 4200 range on the market. We got a nice push back off that level, right? We started to see that the market held that level. We started to see buyers step up. We know that that was an important level right at that 4170 to 4200 on the weekly chart. After coming back down and after losing that level, since this point, since May of 2022, the 4170 to 4200 level has rejected every single time it has been tested. So we can see we moved under, we came back up, we rejected that level. We moved back under, we came back up, we rejected this zone. Moved back under, came back up, rejected. Once again, rejected. And you guys can see as I make this video, today, on April 4th of 2023, this weekly candle is now testing the 4170 to 4200 level that has been rejected multiple times on the weekly chart. A level that must be paid attention to if you are a trader. If you are someone that is willing to be open to either side, willing to trade off technical levels, you have to be paying attention to this level on the S&P 500 futures. Now, if I break this chart down to the daily chart, the last year of price action on the daily chart, we can get a little bit more detail into how the market reacted at these levels in the past. So we can see that back here, this is back in May, we saw that rejection come in. We traded around it for about 4 to 5 days and ultimately moved lower. Here, this is back in August. We did get a pop through that 42 up to that 4,300, which again is a level that I'm going to point out later in today's video. We can see we popped up into that 4,300, and that is where we ultimately rejected. After falling back under 42, we retested it, and we rejected. Came back up, big rejection off 4170. Moved back up into it. This is back on the 13th of December. Came into it. I believe that was FOMC or CPI. It was a pretty big event on the 13th. I forgot exactly which one. You guys can fact check me. But that is a pretty big event and a pretty big reaction off that 4170 to 4200 zone. Came back into it beginning of 2023. That is where the market ultimately rejected after consolidating for about 5 to around 7 days of price action and ultimately rejected that level. You can see over the last few weeks, we have pushed into it, and today was the first red day after touching the 4170 to 4200 level on the S&P 500. Now, I want to make this very clear. I am not showing you this level and making this video to predict that we're going to reject off this level. I am simply letting you know that their level is here, and that if you are trading on an intraday basis and if you are a trader that is focused on risk to reward, then you have to understand that the level is here, and you have to know that your upside risk to reward simply does not make sense at the current moment. If you were to go long long at the current market price looking for upside continuation, you would simply be ignoring supply and demand levels. Now, I'm not saying that that does not work out. I'm not saying that you could go long here and you can make money. We could break 4,200. We can continue the rally that we have seen. But I wanted to let you know that you would simply be ignoring supply and demand levels that have been on the market over the last year, and that your current risk to reward just simply doesn't make sense. Now, whether that is information that you care about, I don't know. But if you are a technical trader and you are focusing on technical levels, which I believe most of you are, if you watch my video, you have to be paying attention to this level, and you have to understand that the risk to reward for upside here just simply doesn't make sense. Now, to illustrate this risk to reward that I am talking about, which I think will help you understand what I'm getting across here, is I'm going to go ahead and put a line at the current market price, which is 41.32. That is where we are trading as of right now in the after hours, and I'm going to leave that line at 4,200. I am going to put a green box between those two lines. This signifies our reward if we were to long right now, and if the market was to push into 4,200, which would be the extent of the reward that you can possibly map out without hoping and praying that we break out. Of course, the hope and pray may work, but I'm not going to talk about hoping and praying on this video. Your max possible reward would be up to 4,200, where we have had harsh rejections in the past. Your risk on a trade like this, logically, would be possibly back down into these lows of back in December, and this is back in March. This is your risk on a long trade at the current point. I'm going to turn this red, and I'm going to signify our risk. Would you take a risk to reward that looks like this? For me, personally, I would not. Right? This is not a trade. This is not a long entry that I am very interested in. Unless we were to get over 4,200, turn it into a new support, that is where that long entry risk to reward makes sense. But I'll get to that in just a second. Now, if you were to short here at the current market environment, not saying that that is going to work. I am not making this video to try to predict what the market does. But if you are focused on risk to reward, which I believe you should be as a trader, this is now what your risk to reward looks like. So now this is our risk. We are going to turn that red to signify our risk. And our possible reward, if we get a big move in our favor, is back down to the lows. This is a risk to reward that makes sense. You're risking about 70 points to make just about, this is about 200 and something points. That is a risk to reward that makes sense. That is why I am making this video. I'm not saying that it's going to work out. I'm not saying that the upside or downside is going to come in. But if we focus on risk to reward, which in the long run will keep us profitable, if our wins are larger than our losses, that is something that has to be paid attention to be profitable as a trader. So now the question is, how do you go long in the current market environment? What would you look for to potentially get a new long entry, a confident long entry with a positive risk to reward? For me, it is a break and retest above 4,200. I believe that 4,200 level on the S&P is going to be crucial. And if we do push above that 4,200, and if we do turn that into a new support, that would be where I think the risk to reward flips to the longs and where it makes sense to now enter a long position. This would now be your risk to reward on a break and retest of 4,200, risking about 30 points to the downside, looking for that upside into 43, which is the previous highs. That's about a 100-point reward for a 30-point risk. Now that makes sense to me. So in my opinion, as we currently stand on this market, for me to get confident once again on the long side, I would need to see that 4,200 break. I need to see that 4,200 turn into a new demand, and then I can set up some long entries in regards to risk to reward. So I hope that this video helps you sort of illustrate what's going on in my mind as I trade on an intraday basis and as I do my technical analysis here on the S&P 500 futures or any chart in general, right? I'm doing that same type of analysis across every stock that I may trade. If you are a swing trader, this is even more important, right? If you're looking for those bigger moves, you're looking for those large market structures, this video should absolutely be paid attention to because you are probably doing similar types of analysis, focusing on your risk to reward, where it makes sense to long, where it makes sense to short. And I believe I illustrated that well in this video, so I hope that helped out for you guys to sort of understand where the market is currently trading, how we're approaching this very important 4170 to 4200 and how you need to watch this as you come into every single trading day. Now, once again, I don't want you to take this video and look at it as I have to be short here. I have to look for short entries. I can't look to go long here. There's obviously moves on an intraday basis to both directions. If you are a short-term trader, a scalp trader, there's going to be some short-term demands to watch. There's going to be some bounces you can possibly take. But if you are someone that is more focused on where the market is there market upside continuation? Is that possible? Is there rejections above? This is something that you have to pay attention to. So I don't want to approach a day with a bias and only look for downside. That's not something that I want you to take away from this video, and I don't want to build that bias myself. But if we come into a single day and I see the S&P 500 moving higher, I am not going to trust it very long. I'll look for maybe some scalps. I'll look to see if there's a short-term demand to trade. But am I going to set up long-dated entries looking for a breakout of 4,200? As of right now, personally, I am not, because risk to reward, again, just doesn't make sense at this level. So I hope this video comes across the right way. I hope you learned something from it. I hope you understand the technical level that we're approaching. If you have any questions, comments, make sure to drop them down below. Let me know what you guys think about this 4,200 level. Let me know what you guys think about the illustration of risk to reward. Are you trading it? What are you looking for? I'd love to hear your opinion. Once again, I appreciate you guys stopping by. I appreciate you guys supporting the channel. As always, press that like button before you head out. Subscribe to the channel. And make sure to stay tuned to the pre-market live streams. We go over these technical levels every single morning. So if you're interested to see how this plays out on the next few weeks, next few months, come hang out in the pre-market live stream every single morning starting at 8 a.m., reviewing the futures, going over these technical levels, and preparing you for every single trading day. I hope you guys have a fantastic rest of your night. Thank you for all the support, and I hope to see you in the next one. Peace.